comparing the price action of the small cap Russell 2000 to the large cap S&P 500. This approach provides all sorts of useful information. For example, if the small cap stocks, which tend to have more of their revenues based domestically, start to outperform the large cap stocks, it could be an indication that the market is worrying about international trade issues, which generally have an outsized effect on the large cap multinationals. Finally, you can combine all these techniques to drill down as much as possible. For example, by examining the various price relative studies, you might find that the large cap stocks are outperforming the small caps and that healthcare is also starting to outperform. You could then build a screen to find a large cap healthcare stock that is outperforming the sector. To learn more about technical indicators and how to use them, check out all the other videos in this series and subscribe to our YouTube channel.
This is Trader Talk.
Good morning and welcome everyone to Schwab Live Daily. It's our Wednesday, June 17 edition of Trader Talk in today's market. I'm your host, Kevin Horner, joined as always on this fine day by my man out in California, Mr. Lee Bull. What's happening, Lee?
Sunny out here, Kevin.
Yeah, a little sunny out here in the Denver metro area as well. Looking forward to a warm one. We'll get into a market conversation here for you all momentarily. We want to hear from you today, though, so please consider sending in comments and questions in that Q&A space beneath the presentation window here. Lee and I like to refer back frequently to those comments and questions. We won't be able to answer every question with so much of you participating, but we encourage you to send them in as we work through the discussion today. Also, I want to point out a couple of disclosures here that are important to remember. Our conversation, as always, is informational and educational only. Remember, we're not making recommendations here. Expressions of opinion are always subject to change without notice. We do not encourage the use of technical analysis as the only means of your investment research. We think it can be complementary in nature, though. And in this conversation, we will be looking at some ETFs to review sectors, maybe some industries of the market here. If you're thinking about using these to invest or trade, make sure to review a prospectus before doing that. You get those online at schwab.com anytime, or you're welcome to call us anytime because we are here. We may not be in buildings necessarily, but we are absolutely here to assist. So give us a holler anytime. We're here 24/7. All right, Lee, let me bring up that heat map for you here. It's a little bit of a mixed bag. We've been dancing around in this first half an hour between up and down in a couple of these indices, but where did you want to get going? Overseas, I imagine, yes?
Yep, let's start overseas. Japanese merchandise trade data for May was not as encouraging as people would have liked to see. Their exports fell by negative 28.3%, a little bit worse than the consensus of negative 21%, which caused Japan to close down 0.6%. Other markets in Asia, Hong Kong was up 0.6%, Shanghai was up 0.2%, and India was down 0.3%. Moving over to the UK, consumer inflation in May increased at its slowest pace in 4 years. That's both good news and bad news. It's good news in that it's causing speculation now that the Bank of England may increase the size of its ATIS purchases at tomorrow's meeting. Also, the CEO of Abu Dhabi National Oil Company had an unprecedented meeting of 16 of the world's leading energy executives, and the chairman said, "We are seeing encouraging signs of a rebalancing oil market and the beginnings of economic recovery." His optimism was also shared by the CEOs of British Petroleum and Total. Domestically, after our session yesterday, Mr. Powell, testified before the Senate. He thinks there will be a long road to recovery, but the Fed will continue to be proactive in supporting the financial markets. And he actually said the central bank would think about capping yields if rates go up too much on certain parts of the yield curve. After he said that, the S&P financial sector turned negative for a little while. Remember, he's still continuing to testify today in front of the House Financial Services Committee. In today's economic data here in the U.S., we had housing starts and building permits. We have seen this continuing surge in mortgage applications. It suggested we should get some pretty good numbers, but the actual numbers came in just a little weaker than expected. Housing starts were expected to come in at 1.1 million, but came in at 974,000. Building permits expected to come in at 1.27 million, came in at 1.22, but not too far off the mark anyway. Regarding the virus, China is accelerating containment measures in Beijing. It lifted its danger level from level 1 to level 2 and is now requiring a negative test to leave the city. All schools have been now ordered to close, and restrictions were imposed on all visits to residential communities, and they also canceled 1,200 flights in and out of the city. In the U.S., Texas reported a new high for COVID hospitalizations. So, market doesn't seem to be too worried about recurrence, but who knows what's going to happen, right?
It's a little interesting, Lee, because I think the market's falling back on some of the administration commentary that there will not be a federal level shutdown of any kind, regardless of what happens with COVID. So that's kind of interesting. In my eyes, is the market saying, well, if that's the case, and we're just going to continue to work through this, I think the market thinks that that's something we can manage. Maybe historically we've probably managed it, but the true shutting down of things is where the market is going to show, as we did in February and March, a lack of confidence that as to how those numbers can shake out favorably for us. So at least I think that's some of the reason that we continue to hold up here.
Yeah, good point. All right, should we move on to stocks in the news?
Yes, it's almost what it reminds. I'm gonna say it out loudly. It reminds me of the good old days. The Muppets used to do Pigs in Space, and that's what I hear every time you do stocks in the news. I hear Pigs in Space. But anyway, go ahead. Where do you start out?
All right. Well, let's do some popular stocks. Amazon.
Sure.
Yeah, getting a little bit of a bounce. They were initiated with a buy reading at Needham, and they set a price target of 3,200. That's quite a ways from here.
Yeah, let's see. We're at 28 or 26, so another 600, 550 points. That's not too shabby.
No. Seems to me short-term traders should be watching that 10-day moving average. Where's the 20 on that? 20's better. 20's better.
I agree. Oh yeah, look at that retreat right here to the prior breakout. You know how I feel about that kind of move, Lee?
Yep, you love it when it goes up, tests, holds, and so a positive chart. Obviously, confirmation there on the unbalanced volume.
Mm-hmm.
Not a whole lot to say there. First target is that old high, I would think.
Yeah, I agree.
All right. Now, kind of interesting in the travel stocks. There's been several things going on here. So let's start with Norwegian Cruise Lines and CLH.
Oops. Transpose there.
Yeah, so taking a little bit of a breather, although if you could say it just pulled back to support now.
Mm-hmm.
Right. What they did say, though, they are suspending certain cruises through September 30th. and that is also causing a little bit of pressure on its rivals. They probably look the same, Royal Caribbean, RCL.
Pardon me, I got a little ahead of myself, Lee. I picked the wrong rival to get us started. Here we go.
So they're all pulling back to the 20. If you believe, I mean, this is your chance if you're a swing trader, stop under maybe the low 2 days ago or the 20. You might want to wait for it to start bouncing now. And they're not bouncing right now off of that. They're holding, but you're probably a little bit better off waiting for a little bit of confirmation because some people think they're still,
Lee, it's
overdone on the upside. Yeah.
One of my favorite things that you always point out is the idea that it's more appropriate to buy when the stock is already tested and is starting to move back higher. And you often say the first thing it has to do is take out the high of the prior day. And when it makes that move, that's when you're gaining confidence in the opportunity to continue to make that move. So that's one of the things I think a lot of traders should be looking for as well.
Yeah, I think so. So just keep your eye on it. I mean, if it starts to turn green there, the candle, maybe that might be your trigger, but I wouldn't try to anticipate that.
Thought I'd show Carnival while we're here just real quick.
Yeah, exactly.
Yes. Yeah. Identical.
Yeah. Okay, turning to the airlines, TSA data shows that passenger volumes are still down 80% nationally, even after the last month did show improvement, but still that's pretty weak. And take that into account, and then let's look at Southwest.
Okay. I also heard a terrible rumor, Lee, that I need to bring up after this. Go ahead.
Okay. Southwest will limit ticket sales to 2/3 of capacity through September 30th to ensure that middle seats remain empty. But as you had said a couple of days ago, that's not 6 feet.
No, it's not. I think it's about 10 feet wide from one aisle to the other if you're talking about a 6-seater or 6 seats per row.
Yeah.
I mean, it's about 10 feet, isn't it, total?
Yeah.
It seems to me you could sell the window seats on both and be okay, and that's about the extent of it.
Yeah. Anyway, they also said in a filing with the SEC, it sees its June operating revenue down 70 to 75% from a year ago. However, that was better than the guidance they had given, which was for an 80 to 85% decline. Moving on, did you want to say something now after that?
I just saw a headline that just kind of ruined me. Airlines banning alcohol on planes as a response to the coronavirus. And I'm thinking, I mean, I understand the necessity to limit interaction, so I get that. But I was just shocked to see that it was a ban on alcohol. So I just wanted to mention that. That will keep me from being as much a happy flyer, perhaps, as I normally might be. But anyway.
Yeah, that's true.
Probably not moving the stocks is all I'm saying. But I thought it was pertinent.
Yeah, for sure. Sticking with the airlines, UAL.
Okay.
They see if they are pulling back with all the other travel stocks, and they are. Let's look at a 10-day on that one.
Sure. They're getting removed from the NASDAQ 100. Is that right?
Yeah, Yes, and they're being replaced by DocuSign, DOCU. All right. Well, I guess the 20 is a little bit better than the 10 there.
Yeah, it's been below the 10 a bit here in the last week.
Yeah, so watch to see if it tries to go back down and test the 20. Anyway, the news on them. Put up here. They sweetened their buyout offer for their flight attendants. They also said that thousands of employees had signed up for the buyout, but the number was not enough. So they're going to have to sweeten it a little bit to get more people to voluntarily quit. Yeah. All right, Tesla. Nobody's heard of that one, but
what do they do exactly?
Yeah, I don't know. Well, testing holding that last breakout level, although kind of choppy up there, but looks like the 20-day is something you might want to follow, the orange line.
Yeah. Yeah, I
Anyway, the
think.
news, you go ahead.
Oh, I'm
Yeah.
sorry. I was just going to say, I think momentum traders are expecting, hey, it made a new high. It was just going to continue rolling on here, but needed to pull back and test first at least. What's the specific news today?
Yeah, the news is that they signed a 3-year pricing deal with Panasonic involving the manufacturer and supply of automobile batteries at Tesla's Gigafactory in Nevada. We talked about Amazon Groupon, GRPN.
Okay.
Right now, it looks like we're having a little bearish engulfing candle there at the 20, so be careful on the long side. They lost $1.63 for the latest quarter. That was smaller than the loss the analysts were looking for, which is $1.91. And their revenue also beat estimates, but market's not reacting too favorably. I don't know if they had guidance or not. I couldn't check. Maybe that was it.
Yeah, kind of an interesting chart, but I don't like the setup that's happening here. This is a wait and see for me. I think the area of most importance here is probably support right in this area.
Yeah, I would think so.
Yeah.
So if we close with that bearish engulfing candle, certainly a test of the 50-day, the purple line might be in the cards.
Mm-hmm. Yeah.
Let's see, H&R Block, HRB. Not good.
Mm-mm.
A huge day down. They beat on earnings and they beat on revenues, but the numbers were down significantly from a year ago due to the delay and obviously the tax filing deadline. My God, moved to July. So
Yeah.
sometimes you see the news. You could give you the news, and sometimes you wouldn't beforehand, and you still wouldn't know what happens.
It's true.
Your favorite, Nicola.
I've been watching this one, of course.
Flagging.
Interesting.
Cowen actually started covering the stock with an outperform rating. They pointed out that they're more than an electric truck maker. It points to the strength of their intellectual property and software and firmware.
Interesting. If you're interested in this company, everybody, one thing I've already learned is that their CEO, Trevor Milton, does enjoy being on Twitter, but he also is a believer in transparency. At least that's his mantra. So he's interested in being out there and sharing as much information about his company as he can on Twitter. So I'd certainly encourage you to follow him if you're interested in the company. I think that makes a lot of sense.
Where's the 10-day?
I bet it's providing some support. This thing has moved quick.
There you go. There you go. So short-term traders, keep your eye on that. See if it can start bouncing around this 10, going up again.
Mm-hmm.
That's what I would be looking for. Stitch Fix, SFIX. This is an online clothing styling company.
Yeah, and Lee, I think they use some of that technology where they do the measurements via your phone.
Yes, I believe that's the one. Yeah, you're right.
Which is pretty interesting. Yeah,
kind of forming a little trading range up here.
Yeah, a little sideways, right?
Yeah, it was actually positive after that big run up. We're getting a correction by time here as opposed to price, which is strong. At this stage, you're kind of right in it. So the next trade here for many people would be a breakout of the range one way or the other.
Yeah, and it's about a 350 range here. So call it 22.5 up to 26 plus, or 350 range. Is that what I said? Yeah. So it's right in the middle of it though, Lee. So like you said, a break of the range would be informative. but right here you're kind of having to guess at it a little bit. So maybe a little more patience.
Yeah, so the news on them was Canaccord Genuity rated them as a buy. They initiated coverage. They said Stitch Fix's ability to build a loyal customer base lays the foundation for future innovation and a larger share of consumer budgets. Another one I know that you like, Tempur Sealy.
Oh, Lee, I've had that Tempur-Pedic bed for a very long time. Married 15 years this month, and this is the same bed I have. Yeah. So
Yeah, so they had some positive commentary. They said their quarter to date orders have improved from their prior expectations, and it now estimates that their quarterly net sales will only be down 15% compared to a year ago. They said, I think the reason they're getting a little bit of a pop here, though, is everybody, online sales are the new thing, and they had 125% jump in their e-commerce sales. I think that's what's given the stock a little bit of a push.
all right.
So that's all I got. Oh, wait a minute, I have a
Lee?
couple.
Oh, do you? Okay. I'll let you
No,
keep at it.
no, that's it. I got.
Okay. All right. Well, let's check out what's happening with the S&P here. We had a little bit of a breather all of a sudden here mid morning this first hour. Actually, we haven't even gotten to this point, but this is a little interesting that we started out a little favorable and we're starting to come back to earth perhaps. So we've got an interesting range on the S&P. Let's start us out here with the daily. We continue to eyeball what I think we've considered to be the most important area of support here. And I'm going to put this up, but I don't like that line there. It should be right here, right around 29.70, everybody. We've had a couple of tests since the breakout. Nothing real ugly at this point. I think this 29.70 represents a lot of import. We talk about getting below that. We could find ourselves at that next ledge between 2,800 down to 2,800, excuse me. So basically meaning if we get below the first green line, our support, we should be a little bit range bound in here between 28 and 3,000. This is what you and I were talking about on the heels of the breakdown from last week, where we thought we might see some acceleration into that selling, and it just never materialized, Lee. We got down to this 29.70 range, 29.75, and the buyers once again felt emboldened, and they just started buying us up, and we got the rally we did, off of those lows on Monday, and with a nice continuation just yesterday. So short-termers eyeballing the 20 in the hopes that the 20 can continue to be supportive and that we're going to continue to see the uptrend in play. And I think that's what most of us are eyeballing, is the 20 based on that. Do we continue the uptrend? If we are breaking the 20 and we maybe come back and test 29.70 again, then maybe that becomes the bottom of our new range. And ideally, we won't have to get below 29.70 to go more neutral. If we could even get that time correction or sideways consolidation here at these upper levels, Lee, I think a lot of traders and investors are going to start to look at that as a bit more enticing, perhaps. But what are your thoughts on that?
Yeah, it's kind of interesting that we are, at least at the moment, failing at the bottom of this gap, which is coincident with that high back in the end of February. That just, we blew right through it last week, but now it's giving us a little bit of a heartache there. And Charles in Florida wants to see the SPY too, so it's going to look the same, but we'll just give you the levels there. As you said, Charles, it looks like support is at 297.
Okay. Oh, and I've got a Fibonacci retracement on here that seems to be kind of appropriate here, Lee.
Yeah, and then again, then that high from the end of February we talked about on the SPX might be kind of a top of the short-term range. Not there. Down to the right. Keep going.
End of February?
Or the beginning of March, right there, right there.
All right.
Yeah. So we are pausing a little bit right in here. We're trying to fill the gap, but we haven't done it yet. So that might be maybe yesterday's high. What was yesterday's high?
Yesterday's peak was 315.64.
Yeah. So yeah, I think Charles, you might have a point. Trading range
Mm-hmm.
297 to 315, 316, something like that.
You know, this looks like just a little consolidation, Lee.
Yeah, I mean
I mean,
we're holding the pivot really.
you could draw a triangle right into here. So this bottom, these bottoms. So you want to see the bounce come into play now. Obviously,
Yeah,
we're at the pivot, a good spot.
yeah. If they're going to start nibbling, this would be about where they do it on the intraday
Yeah.
basis. And where's the 20 EMA on this?
We've been moving through it, so we aren't really
Yeah,
showing
yeah,
conviction.
it's kind of flat too, so that doesn't give you a whole lot of guidance when it's flat.
But I would say if you're a short termer, one of the things that short terms are looking at is when you bust out of these. So you mentioned the gap here. This is the gap move you're talking about. We're in the middle of that.
Yeah.
And then we got it all the way up to 318 or 319 or so. But notice that when we've pulled back here in the last 2 days, it's these moves that get below this range that have been bought up, and this has been the support level. So I'd say we're sitting right on support, and we would like to see some action come in right now, please, buyers. That is,
Yes.
To support this move and give you reason to believe that there's more upside in the short run here. But we're sitting right on it, and it's getting a little precarious, at least in the short
Ye-
term today.
Yeah, if we break those earlier lows there, it looks like you could have a quick kind of air pocket down to 308,
Yeah,
which is
pretty quick.
S1, and is also it matches up with those couple of peaks. You get out of 308 there. Yeah, so.
Yeah, we'll have to keep an eye on that. That should make for an interesting day today. Let's see what's happening with the NASDAQ here. All right, so similar look, except the NASDAQ peak its head above yesterday's high. 99.63 and change. Today is 99.67 and change. So it did peak above it just a little bit. Call that a test to this point, but this continues to look really goodly. I mean,
Yeah, that's certainly
that's clearly.
Yeah, but as I've been saying, I'm not sure that it's put up the cues because to a certain extent, as I've kind of been saying, it used to be really good that the Nasdaq type stocks were leading and everything.
Mhm.
I'm just beginning to take the view a little bit though that is a default trade for the institutions. They want exposure. They just buy those big mega cap tech names. I think it's almost defensive at these. So that's worrying me just a little bit. Because like Apple, what was it, a new high?
Yeah. I think they. Sure.
Yeah. So. Yeah. So that
I know
kind
what
of.
you're saying. You'd feel a lot better about the internals, essentially, what you're saying, right?
Yeah.
If it was a more broad move.
Yeah. That's all. I mean, I wouldn't fight the tape on the NDX, but.
It's funny. I was scrolling through Twitter yesterday, and I saw Jim Cramer saying something like, "Don't fight the tape and don't fight the Fed." And I'm like, "Why didn't you attribute this? How come that doesn't say Lee Bull right beneath it?" Who do you think you are, Jim Cramer? Clearly, he's of the same mindset as you. You can't push against what's happening necessarily. So, but yeah, we certainly like to see more. A broader investment in some of those non-mega caps. But because you're right, there's a little bit of a false sense of security in investing in those big guys, isn't there?
Yeah. However,
Uh,
I mean, we'll take it, but I'm just pointing that out. What's the small caps doing today? They're down.
Let's see, down a bit. They're actually our worst performer of the day from an indice level. Failed at the 200 yesterday. Notice there's a good tail there. Ran to it and pulled back. Holding the 20 as we speak. That's an important level to maintain if this trend is going to continue. Notice we did have some of these tests of the 20 where you're below the 20 for a couple of closes, and that really puts the onus on the trader to make sure they're appropriately positioned when you get that kind of indication of short-term weakness. But holding the 20 for now, and at least for the moment, continue to see the uptrend in place.
All right, sector action.
All right, so strength is in the semis.
Yeah, they bought up the VIX yesterday too. A little hedging going on up here again.
Yeah,
Another day. Yeah.
So the SOX at resistance here, perhaps the prior all-time highs, trying to get back into its island here, right?
Yeah.
Which stands out because notice there's a gap move here, gap move here. That's kind of a heads up. Yeah, just a little bit. I don't know. I'm going to continue to eyeball the 20 here, even though we're still at these upper levels. This is an interesting area that you want to see the SOX pop through, Lee. 20 comes back into play, though, that would be okay. Because the 20 has been really good going all the way back into early April. This is the 6th. Let me refresh this because we've had some movement here already. All right, so SOX is leading, staying up. Staples, relative outperformer here. Wait, that's about range bound, huh?
Yeah. Traded as a range. The
Yeah,
trend is
57,
sideways.
60.
Yeah. Sell near the 200. If it dips down, buy near 57.
And that makes even more sense when you look at the lack of slope in the 200 there, huh? And that's about as flat as 200 as you might find. Let's see. Boy, Lee, we are getting a little bit of volatility here, aren't we? We're getting some bounces, and they're checking some of these levels on an intraday basis.
Yeah, so we got a question for you there, Kevin, from PK in Illinois. We talk about these moving averages, the 20, 10, and 200. Why are they significant?
Well, they're significant because they offer insight as to where traders are looking to acquire or looking to sell shares. What's interesting about them is, as you might notice, Lee and I are frequently removing or changing the moving average, which seems to have the most importance for the group or for the stock you're watching. So it's a delicate balance, isn't it, Lee, between picking the moving average that is good for your time frame for a trade and the moving average that the stock seems to be respecting in the current situation. The truth is, I think one of the nuances that's difficult for newer traders is the idea that a moving average has maybe less value in a scenario like this when we're going sideways. Notice how the price action really doesn't seem to have much concern about the 20-day here, for example, in this period of time. So the moving averages are a little less reliable in sideways action, where you might want to look more specifically at horizontal support, horizontal resistance, which tends to be a little bit more consistent. But what I find interesting on the XLP chart, Lee, is that while the 20 doesn't seem to show much interest, the 50-day has been. pretty supportive along the way.
Yeah.
So this is a kind of a good opportunity to say here's how we eliminate the 10, you eliminate the 20. It looks like the 50 has been really important as it's gone and done its maneuvering here. So it's been supported by the 50 all the way back into early April, mid-April, as it turns out. But the rest of those moving averages have kind of been inconsequential. So, you know, I think the answer to the short answer to the long-winded response that I've really given here is that it's the matching of interested buyers versus interested sellers, and when it happens at a moving average, it's really informative for us traders.
Right, because of there's a certain level PK of self-fulfillment, and
Mhm.
people act on it.
And we like to work with what most people are working with. That self-fulfillment gains steam with that.
Right.
So, yeah.
Let's look at financials. They got they're losing it a little bit here. The
Yeah, they
10-year
are.
is going down.
Yeah, let me hide my support line here. I mean, that's a pretty good important support line, but let's see what's offering. See, now this is kind of an interesting spot, Lee.
Yeah.
Failed at the 10-day. Don't like that.
Maybe that is portending a pullback down to like 23-ish. Those old
Yeah.
highs. Somewhere
Right
in
in the
there.
neighborhood of the 50-day, right?
Yeah.
So,
I mean, the what they said about interest rates and the yield curve is not the most positive fundamental outlook for the financials.
yes. Yeah,
Let's
you're
take a
right.
look at let's take a
Go
look
ahead.
at the banks. Let's take at the money center banks.
Sure. I'm having a moment, Lee.
KBE.
Thank you. Some mornings, I tell you.
Same thing. You know,
Yeah, below the 10, not ideal. I don't need these lines in here. I just want to check the 10-year real quick. We're back under. Yeah, that all looks very similar.
yeah, we're back in the range.
Yeah, I think it's important to watch the 10-year if you're a bank, if you're watching the financials and banks. I think the 10-year has a lot of import on it. When you see the 10-year spiking, you're going to get good spikes on the XLF. They just go hand in hand. Retail had a big day yesterday. Retail sales numbers came in far better than expected. We're holding the 10. Hey, huge tail there yesterday, Lee.
Yeah.
Really nice tail to get bought up. Very important for it to hold the 10-day now that it did that, though.
Let's take a look at the XRT.
Okay. Yep, right in the middle of it all.
Yeah.
I think the most important thing here, again, probably this right there.
Yeah, so
So
you got a band of support. So you're okay if you're long, as long
Mhm.
as you hold that band of support. Again, we're not talking about investing, we're talking about trading. So as long as you kind of hold that 40 area, there's a with zone of support between the 200 and $40.
Mm. All right. You mentioned home builders. We had that number come in. Let's see what they're doing today.
Well,
Continues to look strong.
they
Here,
still
I'm
look
going to
strong.
shift off the 10 and go to the 20.
There
See
you go.
why.
Yeah.
Again, I got some of these lines we probably don't need. Yeah, that's the 20, I think, offers the most importance here. And boy, look at this candle, Lee, that got down into the gap here and then just got bought up. And boy, that was a great candle on Monday. Just a
Yeah,
really fantastic move.
yeah, Lennar came out with those good earnings, so that was
Yeah,
part of it.
always helpful there.
All right, we haven't looked at materials for a while. Let's look at that.
Yeah, talk about well, it's a group, Lee. Uh, it's a, it's had a nice bounce back here, obviously, right? Really good bounce back.
It is bull market behavior on the
Mhm.
RSI. Notice how you did get to overbought in the big sell-off. You didn't go anywhere near 30, so that's bull market behavior. We haven't looked in this group for quite a while. How about material stocks above the 200 and above the 20?
Okay, that makes sense because the group is above the 200 and
Yep.
testing the 20. So I like that. At least, the group has at least got the opportunity to go back to where it was here. But you can see that this pink line has certainly got some sort of importance for it,
Yep.
right to it on the last peak.
Yep.
Materials above the 20 and materials above the 200. So let's check this out. All right, so what do I have? Materials. There you are. We haven't done this one in a while.
I know. That's why I figured we'd take a look.
All right, so we're going to make sure that my industry is accurate. Okay, the entire sector, so all industries and sub-industries. Last trade over the $10 a share. Last trade over 20 SMA. Last trade over 200 SMA. And then we want enough volume, A's and the B's. Let's kick out this technical condition. Let's see if that helps us out.
No.
This was a really tight list, Lee.
All right. Well, we spent some time on these. Sherwin-Williams, we had talked about this one before.
I think I said something about painting, and right
Right.
before the show, I was telling you how much painting I'm doing lately. It's certainly a popular time frame to be doing it. Here you go. Oh, and
So,
pretty close to breaking all-time highs, Lee.
yeah. Watch this one for a breakout.
I think that's the trade too.
Because you're right near it.
Yeah, it's still 15 points away, or 15 or 20 points.
But
So
on a
I guess you could
$600 stock,
trade the
that's not
range.
much.
Yeah, exactly. I mean, it's 15 points on a $600. That's 2.5%. So, I mean, I guess you could step in here. You could certainly look at this area down here for a stop below the last bottom here, below the 50-day. But everybody, that's 50 points. I don't know if you want to risk 50 points. That's why Lee and I are probably thinking about the breakout idea being more appropriate. Notice it did break out technically here on this day, gave you a new all-time high on an intraday basis at 603, but it closed at 594 that day. So we'd call that, and then the subsequent pullback, a failed breakout. Since it did make a new all-time high, but then it retreated. What I find positive on this chart, Lee, is that retreat came to the 50-day on the money, and that's what got bought up with a beautiful engulfing candle on Monday.
Yeah. So, but at this stage, do your risk? I mean, if you wanted to anticipate the breakout, you might want to put a stop under yesterday's low to tighten it up a little bit.
Yeah. And the only trouble there again is that's still, 15 points away. So it's all about setting the appropriate risk for you, everybody.
Did the OBV confirm that last high?
I'm sorry?
How about the OBV? Did it
Let's find out.
confirm that last high there?
Yeah, the RSI liked it. Actually, the OBV higher now than it was back here.
Yeah, so that's kind of interesting. That that would just increase the odds that you're going to try again to break out.
Yeah, and just that though, going to try again, right?
Right.
So that implies it can run to the highs. Whether it breaks the highs or not is up for debate.
Right. All right. What else is on that little list?
Check RPM. Now this looks a little more interestingly because it broke out the highs, retreated to a 20 SMA, didn't really get back all the way to the 200. But look at the on-balance volume here, Lee.
Yeah.
That's a really strong OBV. Even in the midst of the movement lower, so this retreated from 80 Heck, Lee, that dropped 10% plus. And it didn't lose any momentum in the on-balance volume. So that's pretty interesting to me.
Yeah, I mean, depending on your time frame, you have the 50 coincident with the support there too.
And the 200 right at it as well.
Yeah.
So
So if
longer
you're
investors would certainly eyeball the 70 ledge as support.
Right.
If you're a trader, you might eyeball the 20. You had a really great tail on it yesterday where the low came in at 74.80 and the 20-day is 74.50. So it was within 30 cents of hitting the 20-day. They bought that up. That would, I think if you're looking to take a chance, that's the place to put a stop, is below the low of either the low of yesterday or maybe even a little below the 20-day. Somewhere in that range might give you the opportunity that you're looking for. But let's just see if this is along all-time highs here. Yeah. Okay. So that's pretty interesting. And then check out EMN. These all look pretty similarly.
Yeah. I mean, they're okay charts. I think maybe the worst case on some of these is they chop around up here a little bit, but
Mm-hmm. I think,
you're,
again, as usually, depending on your time frame, I think that 66 ledge looks pretty darn important here.
yeah. So if you did that, you'd have what, 5 points of risk, and how far are we from the old high?
7.
7. So you got positive risk to reward. But
Mm-hmm.
if you wanted to risk all the way down there, if you wanted to tighten it up, just put a stop under yesterday's low in the 20 to see if you test the high. Because it'll move pretty quick if it starts filling that gap.
You're right. Hey, Lee, we got, I know we're up against it. What do you say we check the final one here? And
Okay.
we'll move on. CMC. I would say that, a similar view here. The 20 is a little late. This is catching up to the others, it looks like to me, Lee, because the major moving averages are, the shorter term moving averages are still below the longer run here, the 200. So this has got a little catch up to go, but I also like that there's more upside in terms of previous price ranges that it has seen. So I think ultimately this looks awfully similar.
Yeah. Maybe you have a little more upside. But on the other hand, it's not as close to highs as the other one. So it really depends on how you view that.
Yeah, it becomes a discussion on preference and approach to trading, doesn't it?
Yeah.
Which
And those words of wisdom, what's coming up next, my friend?
All right, well, we got a little break coming, everybody. So maybe it's nap time. I don't know. We have our next segment at noon Eastern. That is how to use index options to hedge your portfolio. This is a really interesting way of approaching your long portfolio for those of you investors who don't want to unload stocks necessarily. This might be a chat to check in on. So that's hosted by senior derivative trading strategist Nina Milivots. She's joined by Schwab regional investment strategist Brian Bell. And then, of course, a little later, we have Lee's Daily Charting the Markets, who, Lee, you are joined today by fellow CMT, Lou Mercer, which is always a great chat. Lou's a wonderful guest.
Yep. So stay tuned, everybody.
Appreciate it, everyone. Have a fantastic rest of your trading day.
Hello, and welcome to the Quick Start video for the options chain available on Schwab's StreetSmart Edge platform. Let's load the options chain. It can be found in the All-in-One Trade tool as well as Symbol Hub. For now, let's load the All-in-One Trade tool and click on Options Chain. In the main lower panel, the chain loads with basic information about each option in the chain, like call or put, the symbol, last trade, the change, bid-ask, the midpoint, volume, and open interest. You can add Greeks, probability, or other quote data in the Manage columns and Settings page. It can be accessed through the Actions dropdown or through right-clicking in the chain and selecting Columns and Settings. For simple calls and puts, click the arrow at the beginning of each row to display the available contracts for a particular expiration date. For more details about each option, click the arrow next to the contract to display the contract specifications along with other data. When you've selected a multi-leg strategy to trade, click the arrow at the beginning of each row to display the legs in each set. The Option Chain Filters row allows you to determine which contracts or pairings are available for you to view and choose from when setting up an options trade. The filters include Strategy Selector, Expiration Filters, Number of contracts or pairings to show, and when applicable, Width. These filters help to narrow down the chain to find the contract or pairing that meets your criteria. To remove adjusted options out of your option chains display, you'll need to uncheck it in the option chain setting. You can filter weekly and quarterly options here as well. Trade directly from the option chains. Be sure you're in the Strategy Selector tab. Once there, all you have to do is click on your strategy of choice. The trade ticket updates to your strategy, and the contracts or eligible pairings will display in the option chains below. Click on the contract or pairing you want, and it is loaded in the trade ticket above. This sets up a limit order set to the midpoint price for that strategy. However, feel free to change that price to whatever you would like. In the Action field, choose whether to create a buy to open, buy to close, sell to open, or sell to close order. Max gain, break even, max loss, and estimated cost calculations will be displayed depending on your action. Lastly, we have the Views selector, which includes Theoretical, which is a view of calls and puts that allows you to select a Greek model and make changes to the different parameters that affect option pricing as calculated in that model in order to see how those changes would affect the prices and Greeks in that chain. And Covered Call, which shows calculations for covered call or covered put transactions. The Covered Call calculator gives traders an idea of how a buy right might work for or against them at expiration based on what they paid for it and where the stock price was at expiration. These are both estimates based on a mathematical model, but it can be used as a baseline for planning an options trade. This concludes the Quick Start Guide for the options chain on Schwab's StreetSmart Edge. Please check out the Learning Center and the Online Help menu, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
Stop and stop limit orders are both tools traders use to manage risk, but they're not the same. Let's look at how they work and explore why you would use each of them. A sell stop order is set at a specific price below the last trade price. If the stock falls to or below this price, it triggers a market sell order. Widely recognized as the quickest way to exit a trade, market orders are filled at the next available price. But stop orders will not protect you from a gap in prices during market hours or from one regular market session to the next. Now, a stop limit order is like a stop order, but with an extra layer, a limit price. Again, you set the stop price where you want the sell order triggered. But here's where they differ. You exercise a measure of control over the trade by also setting a limit price. Instead of the trade being executed at the next available price, you specify the lowest price you are willing to accept. Here's an example of what can happen if you set a stop order without a limit price. Let's say you hold shares of XYZ at $100. Your analysis suggests that if the price falls to 98, it could continue to move lower. With the intention of limiting your downside risk to $2 per share, you set your stop at 98. The stock closes at 100, but due to a disappointing aftermarket earnings announcement, the stock opens the next day at $90. Because the stock has traded below your stop price of 98, it triggered a market sell order. The good news is that your trade went through. The bad news is the price at which it executed was near 90, not near the 98 you anticipated. And if the price bounces back during the day to say $96, you might be sorry that trade went through. The stop limit order can help address this scenario. Let's use the same premise with you holding shares of XYZ at 100 and setting a stop order at 98. But this time, you're also going to place a limit at the minimum price you're willing to sell these shares. Let's say 95. In our first example, you were sold out at 90 because once the stop was triggered, it became a market order and executed at the next available price. Using the stop limit order, your order is still triggered, but doesn't execute unless the price rallies and hits your limit of $95. In this case, it works well. The price rebounded and the limit price protected you from taking a greater loss. You might think this is a better approach, but what if that price didn't rebound and instead continued to fall, hitting $85, $80, $75, or even lower? Now you're left holding those shares while their market value evaporates. So when does it make sense to use a stop versus a stop limit order? A stop order typically ensures that your trade is executed, but it does not guarantee the price. It can provide protection during regular market hours, but in a volatile market, you have no control over the price you'll get, and you may face a larger than anticipated loss. Use a stop order when you are more concerned with getting out of the trade and are not as concerned about the price. A stop limit order typically ensures that you get the price you set, but it doesn't guarantee that your trade will go through. As a result, you could be left holding shares worth far less than you anticipated. Employ a stop limit order when you are willing to hold the shares if you can't get your desired price. For more information, watch our other Trading Up Close videos and subscribe to our YouTube channel.
So Schwab just taught me about an iron butterfly spread.
Nice. I just tried an iron condor.
Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader.
Hi, this is Jeff Kleintop with 90 seconds on what we're watching that could move the markets this week. It's been an impressive run for stocks, but last Thursday they took a breather with a 6% drop, taking stocks back to where they were about 2 weeks ago. Now, the sell-off took place after markets became more vulnerable by pricing in a V-shaped economic recovery in recent weeks, evidenced in the strong gains that were accompanied by a rotation to economically sensitive stocks and the rise in bond yields. Now, triggers for the sell-off seem to be the risk to the economic recovery posed by a second virus wave and the outlook for a slow labor market recovery from the Fed, which was reinforced by Thursday morning's weekly number of new filings for unemployment benefits, which remain well over 1 million. This week, Fed Chair Powell testifies before the Senate on Tuesday and the House on Wednesday and could echo his gloomy tone from last week. Also, a stubbornly high jobless number this week could also be disappointing if it suggests the labor market rebound in May is now losing steam. However, much of the data this week probably continue to point to a solid recovery. Now, the Bank of Japan, the Bank of England, and the Swiss National Bank set monetary policy this week. Also, European leaders may meet to discuss a 750 billion euro recovery fund proposed by the European Commission. And the market may welcome more stimulus. Already, the total global stimulus is equivalent to a jaw-dropping 28% of world GDP. Thanks for watching.
Earnings per share, or EPS, is one of the most widely used ways to gauge company profitability. To calculate, divide the company's profits by the number of outstanding shares. EPS matters because strong earnings tend to drive the price per share up, and that's good for investors. Earnings also generate money the company can reinvest in growth. But EPS has limitations. If a company uses earnings to buy back shares of its own stock, there are fewer outstanding shares in the equation. That drives the EPS up without any actual increase in earnings. EPS also doesn't consider outstanding debt, or that two companies might have the same EPS, but one company used less capital to generate the same profits, indicating it might operate more efficiently. So while EPS is a fundamental factor in assessing stock value, it's most useful when considered along with other metrics.
Hello, and welcome to the Quick Start video where we cover Screener Plus and Sectors tool available on Schwab's Street Smart Edge platform. The Screener Plus tool can help you identify securities meeting certain criteria by setting up custom screens, as well as providing a variety of predefined screens. You can find the Screener Plus tool by looking in Launch Tools and clicking on Screener Plus. Let's start with predefined screens. The predefined screens can be found along the left rail. Here you can find a variety of equity and options screens. You can find top volume, gainers and decliners, high-low for the day, performance by sectors, and many others. Click once on a screen and its results appear in the body of the window as a new tab. From there you can use actions to print or export those results, or you can click on Save as Watch List to quickly create a watch list out of the results of your screen. Click on Criteria to view the criteria used to produce the current results. Let's talk about custom screens. You can create a new screen by right-clicking on the plus sign to the right of the tabs. Here you can select from popular fundamental and technical criteria. Alternatively, you can easily edit predefined screens by going to the Criteria tab and making changes to that screen. You can name your screen and click Save Screen at the bottom to save those changes. Let's talk about the Sector tool. If you are interested in performance data for sectors, you came to the right place. Schwab has GICS, or Global Industry Classification Standard, for sectors, industry, and sub-industry. You can drill down to the sub-industry to see the individual securities and even save them to a watch list. This concludes the Quick Start Guide for Screener Plus and Sectors tool for Street Smart Edge. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab. The gut check you want, the intel you need.
Pivot points are a tool that floor traders and market makers have used for decades to predict the next trading day's intraday support and resistance levels. Pivot points are calculated using the previous day's high, low, and close. You don't actually have to do the math because the trading platform will do it for you. At Schwab, the pivot point tool shows you 7 levels. First, the pivot point itself, the orange line here, consider the equilibrium point. That's the point around which the next day's trading is expected to occur. And then 6 other pivot levels, the blue lines, That's 3 resistance lines above the pivot point, R1, R2, and R3, and 3 support levels below it, named S1, S2, and S3. That gives you a lot of data that you can use to determine when to enter a trade, when to exit a trade, and where to place your stop. This data is important because all pivot levels can act as intraday support or resistance. Think about them like rungs on a ladder. A breakup through any pivot level is a bullish indication and suggests there may be further upward movement to the next rung, and this signals a possible buying opportunity. On the other hand, if the stock falls through any of the pivot levels, it is a bearish indication and suggests an opportunity to short the stock. You can also use pivot points to set short-term targets for your trades. Let's look at an example. As soon as the stock breaks through the pivot point to the upside, you might buy with a potential first target at R1. Here you might choose to sell some or let some ride until the next target, which could be R2. Similarly, if a stock drops down below the pivot, you might consider setting a downside target of S1. If it stays there and then drops further, you could reshort it with the target of S2. So remember, a break through any pivot level can indicate an opportunity. If the stock or index has been rising and then starts to reverse, you can short the same stock or index you were previously long. Besides setting targets, pivot points can help you manage your risk by indicating where to set appropriate stop losses. For example, if you buy a stock because it broke through a pivot level, you might consider placing your initial stop under that pivot level to limit downside losses in case the stock reverses. If it continues rising and goes up to the next level, you could raise your stop to below that next level to attempt to lock in upside gains. Similarly, if you are short a stock because it broke down through a pivot level, you might place your stop loss just above that level to limit losses in case it moves higher. But remember, there's no guarantee your stop order will be filled at or near your stop price. Pivot points are often combined with other technical indicators like moving averages and MACD to gain added confirmation. To learn more about technical indicators and how to use them, watch the other videos in this series and subscribe to our YouTube channel.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
Controlling risk is a major component of any trading strategy. Bracket orders can help you automate risk management and reduce your emotional involvement. When you use brackets as part of your opening trade in Schwab's Street Smart Edge platform, you can place a limit order for a stock at a price you set and then bracket your exit strategy immediately upon execution. You can simultaneously help protect the downside with a stop order and position yourself to capture upside gains with a profit limit order. And this is a big difference from traditional orders where you'd have to wait for your limit order to execute and then place either a sell stop or a profit limit order, but not both. Brackets are contingent, so only one end of your exit strategy can execute. This allows you to place